Good day, everybody. What a year for South African fixed income. Initially, we started off the year and we thought nominal bonds would be the clear outperformer due to valuation, and how surprised we were in the latter part of 2021 when inflation in the world really surged, and we saw that there were lots of fears in the global market around the effects of inflation and what it will mean. Suddenly we had this big turnaround from the central banks, especially in emerging markets. We saw very aggressive rate hikes by the central bank of Brazil and Russia. And then, yes, eventually, even in South Africa, we saw that the SARB changed their stance significantly from a moderate stance to a more hawkish stance in the latter part of 2021. And we had the first of probably a series of rate hikes, now 25 basis points higher in November. And we could probably expect that the SARB will now probably hike rates through 2022 and even into 2023, although we think the market is a little bit overpriced on what it expects from the rate hiking cycle of the SARB. Obviously, a big turn of events was the Fed, where it was expected that the Fed would only end the QE program somewhere in 2022 and start hikes in the US in 2023. We've obviously seen inflation now move all the way up to 7% in the US, which means the Fed will probably have to be more aggressive on cutting the QE program and even in the rate hiking cycle. So what does it actually mean for South African fixed income assets? Well, cash still remains low because the SARB is going to be on a slow rate hiking path, and we'll probably see the Fed also on what we call a slow rate hiking path. So cash is really not attractive in South Africa. Where we are finding more opportunities is firstly in the credit markets. Yes, credit spreads are still very tight at this point in time, but we are finding one or two selective opportunities in the credit market, especially in the bilateral market or the market for loans directly to corporates. So we are finding one or two opportunities there. Where we really get excited is in what we call the duration assets. So we still like nominal bonds and we still like inflation bonds. So just to put it into perspective, inflation last year was around 4.5% on average, and nominal bonds probably gave you around 8.5% return, which is still a good return on a nominal and a real basis. But the real shiner in fixed income was inflation bonds. If you think about inflation at 4.5%, you had about nearly 15.5% return from inflation bonds. So really that asset class coming into its own when the market is really worried about inflation and concerns around the rand, it really is the place to be. But what does it mean for fixed income assets going forward? Well, we still have the same view that yes, we don't think cash is great. Credit is really expensively priced, and we still think that there's good opportunities in South African duration assets. Now, at this point, we can't really say to you that we think that nominals or inflation linkers are going to outperform each other significantly, but what we would say is rather be exposed to both asset classes. Well, how much? Well, we don't know, but what we would say is rather have both asset classes. And we think it's a good place to be in a multi-asset fixed income fund that is exposure to both nominal bonds and inflation bonds. So we think that inflation over the next year could probably also average around 4.5%, 4.6%. Well, we think that 8.5%, 9.5% type returns, maybe even double-digit returns, is very likely from the South African fixed income assets. Why? Because we're still cheap. The assets are still very cheap, and the South African yield curve is still very steep. Remember, yield curves in the world is very flat, but in South Africa, it's very steep, meaning there's opportunities, there's pricing opportunities. There's still a lot of negative news around government finances, around Eskom, around growth, around inflation embedded in the prices of these assets. And we think there's very good opportunities there. So yes, from our side, good luck to our investors out there. We think there's good opportunities in South African fixed income. And we would still say to clients, please don't sit in cash because you're worried about what could happen to a rand, what could happen to interest rates. We think it already sits in the long end of the yield curve, and there's very good returns on a real and on a nominal basis in South African long-dated fixed income assets. Thank you.